Hello and welcome into the KE Report. Shad and Corey here as your host, and we're talking today with John Rubino. You can follow John over at his Substack page, and we'll put a link to that down below. And John, I always do follow along with your Substack page and enjoy a lot of the articles you put out. You put out one recently that was really highlighting a lot of interesting charts on how well the precious metal sector is doing. I think a lot of people know how well gold has been doing, but finally we're seeing the action in silver, we're seeing it in the mining stocks. We're seeing a lot of junior miners finally get on the stick, but we've seen the royalty companies and the larger producers and mid-tier producers doing well for a while. In fact, there's a chart in there in the recent release that you put out that highlights just how strong the margins are at this point in time, especially when costs are kind of staying steady and we're seeing the metals prices ratchet higher. So maybe give us your thoughts on where we are here in the precious metal cycle, but in particular, how well the precious metal stocks are finally doing.
Yeah, how long have we been talking about this, the three of us, about how eventually the miners would start making money and then that would change everything for this market? Well, it's finally happening because, costs for mining, they're not really rising that dramatically anymore because oil prices are down. Oil was 80 some dollars a barrel a year ago, and now it's 60 some dollars a barrel, which means that all-in sustaining costs for a lot of miners are flat, and now you've got the price of the thing that they're selling going up by 30 or 40% year over year, several $100s just in the last quarter. And that means there are some really good numbers coming. There already have been some good numbers, but there are some even better numbers coming in the first quarter. So I think a lot of the big miners are going to look like growth stocks. They're going to show up on the earnings momentum and the price momentum screens of generalist investors. And that's when the real fun starts. So I think that's very possibly coming in the near term.
That's what I was going to ask you, John. Are these growth stocks or are they value stocks? Because one of your notes, too, is that look at these good numbers that these miners and royalty companies are generating, but they're not growing production. So you would think, well, they're generating cash. So they're either going to grow production, they're either going to acquire stuff, or they should return money to shareholders, which we have seen some dividends announced, but they're not high dividends in terms of percentage when you look at what people can get in other assets, even money market funds. So how are you viewing these stocks, and what do you think these gold stocks should be doing with this money they're generating? Should they go growth? Should they go value?
Well, they're value stocks in the sense that earnings per share and stuff like that are relatively low. And so you can, if you look at a tech stock or something like that now, it's valued based on sales and earnings at a ridiculous multiple. The miners, not so much. They have more modest multiples, and in that sense, it's value. But in another sense, it's growth because they're putting up really good year-over-year numbers, and there's no real reason for that to stop in the short run. The next quarter and probably the quarter after that are going to look great in terms of year-over-year comparisons. So you kind of win coming and going with the miners right now. And then you get momentum. The price of a lot of these stocks are starting to finally rise, So I think you can look at them basically any way you want to, and the picture is pretty favorable right now, just because this is a sector whose time has come. And like I said, we've been talking about this for years and wondering when it was going to happen, and it's finally happening. It was a hell of a long wait. But now, it wouldn't at all be a surprise to see somebody like Warren Buffett stepping up and picking up some shares of like Newmont or something like that, which is kind of his style. He'll pick a well-run, solid company in an unglamorous field and then really load up on it and in the end make a lot of money. And the big gold stocks are kind of in that category now. And as far as dividends go, true, their dividend yield in a lot of cases, I think Newmont's is 2% and change. And that's not an exciting dividend, but with the cash flow guys like that are generating, they can return a lot of it if they want to shareholders via share buybacks and dividend increases. So you could see a modest dividend, but a growing dividend over the next couple of years. So, Newmont's 2 years out dividend might have a 3.5 or 4% yield. In which case, and its ability to finance that kind of a dividend is It's not guaranteed, but it's looking pretty good right now. So you can think of it in those terms. Look at the future dividend based on the cash flow that they're generating. And now the other part of that story is that big miners tend to get overexcited when they have rising cash flow, and they go out and start paying massive premiums for acquisitions. And that's not the greatest thing for the big miners, but it's really good for the small stocks that the three of us focus on. So we could see a lot of acquisitions. And so in other words, instead of raising their dividends dramatically, they go out and they buy our explorers from us at really nice premiums, which is a much better thing than a slightly higher dividend in Newmont stock. So I think that's a very possible scenario for the next couple of years.
Well, John, let's talk on that string a little longer because I think that M&A gets the sector excitement going. It gets the animal spirits going. People wonder who's going to be next. But it also, I think, is a more effective way of growing the business as opposed to doing a paltry 2 or 3% dividend, which isn't going to get anybody excited. Most people don't get into the mining stocks for dividends. If they want good dividends, they can go buy utility stocks, or even the oil and gas stocks have great dividends. When people get into this sector, they want leverage to the price of the metals. So to Corey's point, they want to see more growth. And maybe the sector is ready to move from more of a value position to a growth position. You brought up the point that a lot of the royalty companies had good revenues, but they actually had less gold equivalent ounces. So we need to see more growth, not just in the small juniors, but we need to see more growth across the sector. When you look at the moves in the royalty companies, do you think that they should buy each other up? Do you think that some of these mining stocks should mass up like we just saw with Caliber and Equinox and buy each other? Should we see more growth just to get more leverage to the metals prices?
Well, I think that's virtually guaranteed because that's what miners do when they have a lot of cash flow. They start out raising dividends and buying back shares, but they end the cycle making outrageous acquisitions. And a lot of these guys, well, three just lately, were kind of saved by a higher gold price because it was, let's see, it was Osisko Royalties, Sandstorm, and now Franco-Nevada all reported pretty good numbers in terms of cash flow and earnings, even though their gold equivalent ounces, in other words, their production, went down. But because what they were selling was so much more valuable, they actually had a good quarterly earnings report in the fourth quarter. So I think a lot of that is going to happen across the board in the mining sector, but you absolutely do want growth. And, the mining CEOs understand that. If they're using up more of their reserves each quarter than they're finding with their in-house exploration programs, they obviously have to go out and get those reserves somewhere else. And a lot of the really high quality explorers are just perfect targets right now because they're not even very expensive. Most of these explorers, even though they've been doing a good job of fleshing out their resources over the last couple of years, their stock prices haven't soared. One exception to that is Snowline, which is starting to really run right now, which kind of implies that might be one of the ones that's getting some takeover interest right now. But I think that spreads from the clear, obvious takeover candidates like Snowline to a lot of the less obvious but still high quality explorers. So it's almost guaranteed that there's going to be a lot of M&A in this space now, just because there's so much money to spend at the top of this ladder. So I wouldn't pretend to predict who is next and what kind of a premium it's going to be. But I think there's a decent chance that we see some of those, 50% over last week's average price kinds of takeouts in the not too distant future.
I'm with you, John. Let's start seeing some growth here. Let's put some of this money that these companies are making to work. It is what will draw in more investors too. We keep asking, where's the generalist investor? They still want to see growth. The metals price is doing their job. The companies need to do theirs by actually growing smartly, but also just for growth's sake too. Take advantage of this bull market. One of the key distinctions just in the last couple of weeks, but really this year that we have seen is the gold stocks separating from the broad averages. GDX up about 25% this year. S&P down about 10%. A lot of that has just come in the last about 4 weeks as well. John, look back in history for us. When have we seen this environment where gold and gold stocks have diverged this much from the markets?
Well, this is bigger than usual. Normally, when there's a bubble in some other asset like tech stocks or finance in the housing bubble, those things really just run away and they leave gold and silver miners in the dust. But then they crash, and that's where the question comes in because in the previous two cycles, the bubble stocks fell hard and they pulled gold and silver down with them. So the miners crashed along with the tech stocks and housing stocks and stuff like that. And it was only in the next phase, in the bounce back from the V bottom of the crash, that the miners really shone. And this time, there's a lot of people saying, no, the miners are not going to crash this time. Gold and silver is going to hold up. And the miners will just continue to rise, even as tech and the big banks and a lot of the other leaders in this market turn down. And that's what's happening right now. The gold and silver miners are doing just fine, while tech craters. So far, we're diverging from the previous two patterns. And if that happens, then you get gold and silver miners not only doing well operationally, but doing really well in terms of the overall market. And that's the kind of thing that pops up on generalist screens because, most people don't understand mining and aren't interested in it or anything, but they're able to read a relative strength chart, and if this sector is doing great, they just assume somebody knows something they don't, and they pile in. And we're at the beginning of that kind of a divergence. So that might be the thing, the divergence between big tech and mining that generates a lot of interest from generalist investors. And the miners, well, precious metals in general account for about 1% of global investable capital. So let just 1% of global investable capital flow into this sector, and you have twice as much money as was there the day before, So it's very easy to see the miners really take off from here, even without operating improvements from where they are right now, just because they're looking so good compared to NVIDIA. How long have we waited to be able to say the miners look great compared to NVIDIA? It's been way too long, but it's true today.
Yeah, John, it's been a while since we've been able to say something like that. And the concern was that if the stock started rolling over general equities, that mining stocks are stocks that get pulled down with it. But in the current macroeconomic backdrop we're in with tariffs and trade wars and geopolitical concerns, and you're just seeing concerns over currency spreads and what's going on overseas, there's been a global bid into gold. It's not just a tech stock, it's a uncurrency of its own right. And on every currency on the planet, if you look at it in those fiat terms, gold has broken out to new highs. So it started to drag silver and the mining stocks up with it. Maybe they could avoid the sucking sound if there is a bigger corrections and a sell everything moment in the markets. But walk us through how we may be positioned where precious metals are getting a bid because kind of the chaos that we're seeing on the macroeconomic sphere.
Yeah, the world is pretty chaotic right now. And it's chaotic in some cases for good reasons. I mean, some of the things the US government is trying to do, I wholeheartedly approve of. For instance, pulling out of NATO is probably a good thing, or really scaling back the US presence in Europe. They're big boys now, they can defend themselves. But Trump threatening to do something like that, for instance, is leading the Europeans to, instead of scaling back their global ambitions, they're ramping up their military spending. So they say they're going to do. So they're already heading off that financial cliff along with all the other fiat currency countries. But if they add, let's say, $500 billion a year in military spending, which they have to borrow, that's liable to be brutal for the euro. And so if you have a big fiat currency that is being inflated away that aggressively, that's a really good environment for precious metals. Europe as a whole is a bigger economy than the US. So a stupid monetary mistake over there would lead trillions of dollars into safe haven assets. And gold and silver would be one of the beneficiaries of that. And that's what's kind of coming right now. It looks like the US government is sick of supporting Europe when Europe is completely capable of doing its own defense. And now Europe, seeing that it's abandoned, is basically ramping up defense spending. So this is kind of happening right now. And the effect on the currency, is very easy to predict. So you got the U.S. running $2 trillion a year deficits. Our deficit so far this year in fiscal 2025 is a record high. It's like crisis level deficit spending, and there's no crisis out there. It's just us being unable to control our spending. So you got the U.S. doing that. You got China's money supply just went straight up. They're facing a demographic crisis and a real estate crisis, and they're trying to inflate their way out of it. And Europe now, doing what we just talked about. So put all those things together, and you have a really chaotic geopolitical environment all around the world. And that's great for gold and silver. There's no reason to think that the world central banks won't keep buying gold in order to back their currencies when they see the carnage that's happening out there among the big fiat currency countries. So I think geopolitics is extremely positive for precious metals. Not very good for anybody else, but for gold and silver, it's the right kind of environment.
Oh man, geopolitics right now is a mess, and it is being spurred a lot out of the US. But is there an end game here, John? Because quite frankly, look, Trump is issuing all these tariffs on these different countries, and some of the reasons for that, especially Canada, Mexico, he's talking about drugs coming across the border and illegal immigration. That stuff seems so out of touch with actual tariffs too. And also, how do you declare victory on something like drugs coming across the border? You can search online and find stories that say completely opposite things. So again, this is kind of US led, and the US was really the global leader here in terms of capital and in terms of people looking to the US as a shining light. That all seems to have changed, but do you see an end game here where the US stops picking fights with other countries?
Well, I hope there's an end game here. And if there is one, it would take the shape of Trump getting enough of what he wants to settle down. And then everybody starts meeting each other and shaking hands and cutting deals and stuff like that. So this, crazy part of the process blows over. And then what we end up with is a lot of capital flowing into the US to set up factories, because that's already happening. Most of the big tech companies and the auto companies are realizing that Trump is so unpredictable with these tariffs that they should be producing here to avoid that whole thing in the future. And that's really good for the US economy. I mean, if we reindustrialize, because German companies and Japanese companies and Chinese companies all come here and start setting up, that's phenomenally good for the US economy. It's bad for inflation because our wage rates will go way up, so we'll have wage inflation that we have to deal with. But I think the end game, as the US government sees it, is something like that, where, okay, we all make peace with each other, but the price of peace with the US is you got to set up factories over here. And, if that's the environment of 2 years from now, from a US standpoint, it would be a good environment. So it could be that, as chaotic as it seems right now, Trump actually gets some good stuff. There's a method to the madness and I don't know that for sure. It could just be madness right now, madness to the horizon. But I'm hoping that there's a purpose to it and that the purpose becomes really obvious pretty soon. And if that's the case, I mean, the US is still going bankrupt. There's nothing that stops, because we have the demographic bomb right now where the baby boomers are retiring and the government has to pay off on all the stuff that they promised us. And that guarantees massive deficits as far as the eye can see. It guarantees the currency crisis. But you know what? If we just have a currency crisis, if that's our big problem in the next 5 years, I will take that anytime, compared to World War III or open borders and tens of millions of people from incompatible cultures coming across, stuff like that. So I'm optimistic if you can say, okay, we've got a gigantic currency crash coming and we're going to have to reset the currency. If you can still call that optimistic, then I am optimistic, because I think we can get through a currency crisis. We've done it in the past, and we'll just go back to a gold standard with gold at $10,000 an ounce. And so that's a win-win-win for gold bugs, right? You get a stable monetary system and your gold gets way more valuable. So I think it's completely possible that that's how this plays out.
Well, John, I think we'll wrap it up there for today. That's a positive note to end it on. Maybe we only have a currency crisis reset by a hardback currency, and the precious metals would shine in that environment. Much better to see a financial war than an actual physical hot war. So hopefully it all gets resolved and we can end on that positive note. But any way you look at it, what we can say is things are going to be in the near term and medium term very volatile, and that's still good for the precious metal sector. It's nice to see these companies finally getting a little market love, even despite a turn down in the general equities. And there's a lot going on. So if you want to get John's hot take on it, definitely follow him over at Substack. Again, we'll put a link to that down below so you can follow along with John's thoughts, rants, research, and even what he's doing in his own portfolio. Always a wealth of knowledge that you share there, John. And we're always grateful to have you on the KE Report. As always, looking forward to our next conversation.
Great. Thanks, guys. Talk to you soon.